I've sat across the table from families who did everything right. Good jobs, money saved, ready to go. And I had to tell them they didn't qualify for a mortgage. Not because they couldn't afford it, because their credit score was holding them hostage. Some of them didn't even know why. I've seen people get denied over a $200 medical collection they didn't even know was on their report. Today, I'm going to make sure that doesn't happen to you. Welcome home. Let's unlock this. Nobody teaches you this stuff. They don't teach it in school. Your parents probably didn't sit you down and explain how a credit score works. And by the time you realize it matters, you've already made mistakes you didn't even know were mistakes. I get it. I've been there myself twice, actually. I've had to rebuild my own credit from situations that were completely out of my control. So I'm not talking to you from a textbook. I'm talking to you from experience. Let's get into it. Let me show you why this matters in real dollars, because once you see it, you'll never look at your credit the same way again. Say you're buying a $350,000 home with a 30-year fixed mortgage. If your credit is 760 or higher, you might get a rate around 6.5%. Your monthly payment would be roughly $2,212. Over the life of that loan, you'd pay about $446,000 total. Same exact house, but your score is 620, barely qualifying. Your rate jumps to 8% or higher. Now you're paying $2,568 a month. Over 30 years, $574,000. That's $128,000 more for the same exact house. Same neighborhood, same kitchen, same backyard. You just paid $128,000 extra because of a 3-digit number. I've had families come into my office frustrated and defeated because someone told them they couldn't qualify for a mortgage. They were 15 points short. 15 points. And nobody bothered to show them how to fix it. So I sat down with them, looked at their reports, coached them through exactly what to do, and 30 to 60 days later, they were approved and buying their home. That's the kind of difference we're talking about. And that's what this video is for. So you don't have to wait for someone like me to tell you. You'll already know. Your credit score isn't some mystery number that somebody pulls out of the thin air. It's built from 5 specific things. And once you understand them, you can start making moves that actually matter. Number 1, and this is a big one, payment history, 35% of your score. This is simply whether you pay your bills on time. A single late payment can drop your score significantly. And the more recent it is, the more it hurts. Something 30 days late stings. 60 days late is worse. If it goes to collections, that can follow you for years. Here's what I tell every family I work with. Set up an auto payment for the minimum payment on every single account you have. Every one. That way, even if you forget, even if life gets crazy and you're juggling 1,000 things, you never miss a payment. You can always pay more later, but the minimum has to go out on time every time. Here's what I personally do, and I recommend it to everyone. I put every single due date on my phone calendar as a reoccurring monthly reminder. That way I see it coming before it's due. And if it's a credit card bill, I take it one step further. I find out when that card's billing cycle reports to the credit bureaus. Then I make sure I pay the balance down as low as possible, about 5 business days before the reporting date, because the balance that gets reported is what determines your utilization percentage. So even if you use the credit card during the month, if you pay it down right before it reports, your utilization stays low and your score stays high. That one habit alone makes a huge difference. Number 2, credit utilization, 30% of your score. This is how much of your available credit you're using. If you've got a credit card with a $10,000 limit and you're carrying a $5,000 balance, that's 50% utilization, and lenders don't like that. They want to see it under 30%, ideally under 10%. Quick tip that a lot of people don't know. Call your credit card company and ask for a credit limit increase. If they bump you from $10,000 to $15,000, but your balance stays at $5,000, your utilization just dropped from 50% to 33%. Same debt, better ratio, higher score. It takes a 5-minute phone call. Number 3, length of credit history, 15% of your score. The longer your accounts have been open, the better. This is why I always tell people, never close your oldest credit card, even if you haven't used it in years. The age is helping you. Cut up the card if you need to, but keep the account open. Number 4, credit mix, 10%. Lenders like to see that you can handle different types of credit. A credit card, a car loan, maybe a student loan, but don't go opening accounts just to have variety. This one takes care of itself over time. Number 5, new credit inquiries, the last 10%. Every time you apply for credit, it creates a hard pull on your credit report. Too many of those in a short period of time makes lenders nervous. But here's something important. When you're shopping for a mortgage, all the inquiries within a 14 to 45 day window count as one. Shop around, compare lenders. That's smart. Just don't go applying for credit cards and car loans at the same time. All right, now you understand how the score works. Step 1 is finding where you actually stand. And you'd be surprised how many people have never looked at their own credit report. They just know their score from some app, but they've never read the actual report. That's like knowing your blood pressure but never getting blood work done. The details matter. Go to annualcreditreport.com. That's the only official site where you get your reports for free from all 3 bureaus, Equifax, Experian, and TransUnion. Pull all 3 because they don't always have the same information. I've seen errors on one report that didn't exist on the other 2. Go through them line by line. Check every account. Verify the balances are right, the payment history is accurate, and that every account on there actually belongs to you. I've seen accounts from completely different people show up on someone else's credit report because they had a similar name. I've seen paid accounts still showing as open. I've seen on-time payments reported as late. Errors are way more common than people think. If you find something wrong, dispute it directly through the Bureau's websites. They have 30 days to investigate. If they can't verify the information, it has to come off. I've seen people gain 30, 40, or even 50 points just from cleaning up those errors. Those are free points sitting on the table. Now this is really important, so listen carefully. If you find old collections or negative items on your report, do not, I repeat, do not call the collection company directly, especially if this is old debt. Here's why. When you contact a collection agency about an old debt, it can refresh the activity on the account. That resets the clock and actually can make your score worse than had you just left it alone. I've seen people try to do the right thing by calling to settle an old debt, and their score dropped because the account got refreshed. It's counterintuitive, but that's how the system works. So here's what you do instead. First, try to dispute it through annualcreditreport.com or the Bureau's websites like I just mentioned. A lot of old collections can't be verified anymore. The original creditor may not even have the records, and if it can't be verified, it gets removed. Gone. Scores go up. If the dispute doesn't work, then it's time to talk to a good lender. Not a collection agency, a lender. Someone who understands credit and put together an action plan tailored to your specific situation, because every report is different and the right strategy depends on what's on yours. Now for late payments. Specifically, here's a strategy that a lot of people don't know about. If you have a late payment on an account and it's not something that happened over and over, maybe it was a one-time thing, life got in the way, call the creditor directly and say this: if I were to pay this today in full with you, will you give me a letter confirming you'll remove the late payment from all 3 credit bureaus? If they say yes, get that letter. That letter is gold, because even if the creditor drags their feet on updating the bureaus, you can take that letter to your lender, and then most lenders will do what's called a rapid rescore. It doesn't cost you anything as the buyer, the lender will pay for it. And with that letter in hand, they can forcibly remove that late payment from your report, sometimes within days. And in many cases, your score jumps dramatically. The key here is, it's not enough to pay it off and get a paid in full status. A paid late payment still shows as late. What you want is removal. That's the difference between a small improvement and a game-changing one. Okay, you've pulled your credit reports, disputed errors, and you have a plan for the collections or any late payments. Now let's talk about the daily habits that move the needle. First, pay every bill on time. I know I keep saying it, but it's 35% of your score. Auto pay your minimums. Pay extra when you can, but never miss. Second, attack your credit card balances. Get that utilization down. And you've got 2 approaches here. You can go highest interest first, pay off the credit card with the highest rate and save the most money over time. Or you can use what I call the momentum method. Pay off the smallest balance first to get a quick win and build confidence. Personally, I think the momentum method works better for most people because those early wins keep you going. But either way, pick one and commit. Third, don't close old accounts. I said it in the 5 factors section, and I'm saying it again because people do this all the time. They pay off a credit card and think closing it is the responsible thing to do. It's not. That history and available credit are working for you. Leave it open. Fourth, if you have a family member with a long-standing credit card that has perfect payment history and low utilization, ask them to add you as an authorized user. Their positive history on that card can show up on your report and give your score a boost. You don't even have to use the card. Fifth, if you're starting from scratch or rebuilding, get a secured credit card. You put down a deposit that becomes your limit. Use it for small purchases like gas or groceries, and pay it off in full every month. After several months, most secured credit cards convert to regular cards and return your deposit. It's one of the best tools for building credit from the ground up. 6. Stop applying for new credit in the 6 to 12 months before you plan to buy a home. Every hard inquiry chips away at your score. Now is not the time for a new store card or a car loan. And 7th, monitor your credit. Most banks and credit cards offer free score tracking now. Check it out every month. Watch for changes. If something drops suddenly, you want to catch it before it costs you. So what's the magic number? Well, it depends on what type of loan you're going for. Conventional mortgage, most lenders want at least a 620, but at 620 you're paying top dollar in interest. If you can get to a 740, that's where the best rates live. FHA loan, you can qualify with a 580 credit score and a 3.5% down payment. Some lenders will go as low as 500 if you put 10% down. FHA was designed for first-time buyers and folks rebuilding. Don't be afraid of it. VA loans for veterans, no official minimum, but most lenders want 620 or above. USDA loans for rural areas, typically a 640 or higher. My advice, aim for 680 before you start house shopping. At 680, you'll qualify for most programs with solid rates. If you can get to 740, even better. But don't chase an 850 credit score. Once you're above 740, the rate difference is minimal. Get to 680, get to 740 if you can, and go buy your home. I'm gonna be honest with you, because that's what I do. If your score is already in the 600s and you just need to clean up utilization and dispute some errors, you could see real movement in 30 to 60 days. Paying down a credit card can change your score in a single billing cycle. If you're in the 500s with late payments and collections, you're looking at 6 to 12 months of consistent effort. The negative items don't disappear overnight, but their impact fades, especially when you're stacking months of on-time payments on top of them. If you're coming back from a bankruptcy or a foreclosure, the timeline is longer, typically 2 to 4 years before you qualify for most mortgage programs. But you start rebuilding now, today, so that when that waiting period ends, your score is ready and you're not starting from zero. The best time to start was a year ago. The second best time is right now. Before I let you go, I need to say something, and I mean this from the bottom of my heart. Your credit score does not define you. It's a number. It's a useful number, but it's just a number. It doesn't measure who you are as a person. It doesn't measure your worth as a parent, a partner, a friend. It doesn't measure your kindness, your work ethic, or your potential. Bad things happen to good people. Job losses, medical emergencies that drain every penny and max out every credit card. Divorces that destroy carefully built financial plans. A death in the family that turns your whole world upside down. Economic downturns that hit when you're most vulnerable. Sometimes your credit takes a hit, not because you were irresponsible, but because life happened and you did the best you could with impossible circumstances. I know this because I've lived it. I had to rebuild my credit twice from situations I didn't cause and couldn't control. And I'm standing here today telling you it will get better. If you understand the system, make a plan and stay consistent, one payment at a time, 1 point at a time, you will get there. Don't make a number on a screen make you feel like you're less than. You're not. You're here, you're learning, and you're taking action. That already puts you ahead of most people. Let's keep moving forward together. If you want a free credit score action plan worksheet to help you track your progress, plus 18 other free home buying tools and calculators, head to justinskeytohomelife.com. Everything is free. And if you want the full guide on credit, mortgages, home buying, and building wealth through your home, check out my book, Your Key to Home, a complete guide from dream to doorstep and beyond. If this video helped you, hit that subscribe button and tap the bell so you don't miss the next one. Give it a like and drop a comment below. Tell me, what's your biggest credit question or challenge right now? I read every comment and I want to help. I'm Justin and this is Justin's Key to Home Life, where I help you live smarter in the home you love. I'll see you in the next one.